Hello everyone, welcome to the lecture. Today we're going to talk about TSQ in open high low close and open low high close structure. In the previous episode, we discussed the TSQ sequence in detail from key levels to draw on liquidity and CRT high to low and low to high. So, if you haven't watched that episode yet, go back and watch it first. It will make this lesson much easier to understand. Alright, in this episode, we'll focus specifically on TSQ inside open high, low close, and open low high close structure. So let's get into it without wasting time because as traders, time is extremely valuable. Every minute matters. Now, first things first, before looking for any TSQ, you must know which candle you're trading. Ask yourself, am I looking at the monthly, daily, weekly, or 4 hour? This is very important because TSQ always follows time frame alignment. For example, monthly candle to daily TSQ, weekly candle to 4 hour TSQ, and lower time frames follow the same logic. Now let's talk about OLHC, open, low, high, close. This structure represents a bullish candle, and this is where we start identifying our TSQ. All right, let's take an example. Imagine this is a monthly candle. Price opens here. First, it generates liquidity. Then, we get a turtle soup on the short term low. And this is where the TSQ begins. This becomes our turtle soup phase of TSQ. After the turtle soup phase, price should not stay there or consolidate. The market must expand aggressively. No wasting time. Because real displacement shows intent. Now, after expansion, if price closes above this short term high, the breaker block phase gets activated. When the market comes back to this area and trades from it or expands again, that becomes our breaker block phase of TSQ. So the sequence becomes simple: open, turtle soup, expansion, then breaker, clean, logical, structured. Now, let me tell you something important. Note this down. When you use TSQ inside a candle or OHLC structure, sometimes the OTE phase acts like a kiss of death, meaning price gives a deep retracement before the final move. After that phase, we usually get the last turtle that caps the candle, and that completes the full TSQ cycle. Now, here's the most important part. When you apply TSQ on OHLC structure, it must align with time. Timing matters. For example, on a monthly candle, week 1 is usually range or liquidity buildup. Week 2 is manipulation or turtle soup followed by expansion. Week 3 is often OTE or the kiss of death. And week 4 gives the final turtle that completes the monthly candle. So you can see TSQ is not random, it follows structure, it follows timing, it follows logic. All right. We discussed open, low, high, close. Now let's talk about open, high, low, close. The logic is exactly the same. The only difference is direction. Everything simply flips. Instead of bullish phases, you'll see the same phases printed in bearish form, just the reverse. There's a lot more depth to this, but I don't want to overload you. I've given you the framework. Now it's your job to study it and apply it on the charts. Okay, let me give you some more sauce. And this part is very important. So pay attention. Imagine this is a monthly candle, but instead of looking for TSQ on the same time frame, we drop down to the daily chart. Now, when the monthly activates the turtle soup phase of TSQ, we already know manipulation has happened. So, what do? We don't enter blindly on the monthly. We position ourselves on the lower time frame. For example, on the daily range, price performs a valid bearish turtle soup. Once that happens, you can drop to the 4 hour chart and look for a CRT setup. That 4 hour CRT becomes high probability. Why? Because the idea comes from the monthly, higher time frame bias plus lower time frame execution. That's professional trading. Same logic applies to the breaker phase. If price returns to the breaker area on the daily, you don't just guess. You drop to 4H again, wait for CRT, and position yourself there. Cleaner entry, smaller stop, higher reward, and there's more. You can even use the higher time frame wick. When the market hits draw on liquidity and did a turtle soup on the higher time frame, we can expect at least a short-term move up. That single wick on higher time frame becomes an expansion on the lower time frame. And inside that expansion, you'll often find multiple clean 4-hour CRTs. So even one higher time frame wick can create many lower time frame opportunities. So understand this clearly. Higher time frame gives direction, lower time frame gives execution. That's how professionals trade. That's enough for now. I don't want to reveal anything more. But what I just shared, this is real sauce and this is enough for you. So study it, watch it again, listen carefully, multiple times, because small details like this separate average traders from consistent traders. All right, now let's move to the real chart example. I could start directly with the charts. But to truly understand the concept, graphical representation is very important first, because visuals make learning easier. On diagrams, everything looks clean and simple, but when you open the real chart, it looks messy. Random candles, nothing fancy. Honestly, sometimes it even looks boring. But remember this, those boring candles are the ones that make us money, so never ignore them. Now let's look at Euro USD monthly chart. As you can see, the market took out the range low, did a turtle soup, and reacted from the order block and then closed above this candle. That close above is very important because a strong close above is enough confirmation to target the range high. So now we focus on studying this specific candle. We already have confirmation that the next candle will most likely print bullish, which means open, low, high, close. These vertical lines here represent one full monthly candle. From here to here, this is our monthly range. First of all, let's discuss the previous price action and see what price want to do right here. Price retraced lower and filled liquidity in the form of filling this gap, this FVG, and then we got a close above. With this close above, we have confirmed shift in price. Once we have a shift, the market enters a reversal phase. So now we expect bullish behavior. Now we can expect that after the open, the Ashkas market did turtle soup of this candle range or this swing low, but the probability of this low is less because we have shift in price. Now after the open, market did a turtle soup on this candle range low, then it closes above. That close above confirms a valid turtle soup. If price had failed to close above, then we would consider this swing low. But here the confirmation is clear. Price close above and confirm that this is a valid turtle soup. So now price is ready to expand, and look what happens next. Clean expansion, fast displacement, exactly what we discussed earlier. After a turtle soup, price should not consolidate, it should expand immediately. That completes our turtle soup phase of TSQ. Next, price closes above the short term high. That activates the breaker block phase. If price returns to this area and trades from it again, that becomes our breaker phase. Now, note this carefully, very important. When the breaker block and OTE combine at the same time, it becomes a high probability phase of TSQ. Breaker plus OTE equals strong continuation. This often becomes the strongest phase of TSQ. After the OTE phase finishes, we get the final move, the last push, the kiss of death. Many traders ask, how do we confirm these phases? My honest and simple answer, close above or close below. Closes tell the truth, wicks lie, closes confirm. So this close above confirms higher prices. And finally, the last turtle soup caps the monthly candle that completes the full TSQ cycle. I know this may feel boring at first, but trust me, this chapter is extremely important. In fact, it's one of my favorite parts of this mentorship. So watch this episode multiple times, 3 or 4 times if needed. Study it slowly, because once you understand this, your chart reading will completely change. Alright, I'll see you in the next episode. Good luck and good trading.